The man behind Ethereum is worried about crypto's future. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure to enable all your notifications to our channel to keep up with all the Ethereum scaling solution. Optimism today announced it raised $150 million in a Series B funding round. In a Thursday blog post, the startup said the added cash now means the company has a valuation of $1.65 billion. Optimism is a startup that wants to make using Ethereum, the network behind the second largest cryptocurrency, easier and cheaper. This is because, right now, lots of people are using Ethereum to build things and make transactions with its native cryptocurrency, which is also usually referred to as Ethereum. The Ethereum network is in high demand, mainly because of the explosion of DeFiand NFTs, unique tokens that represent ownership over digital items. It therefore suffers from high fees and, at times, Optimism is working to change this. We cut fees by over 30% in the last year and continue to push enhancements to the protocol that slash fees even further, the blog post said. Sustainable, sub-dollar transactions are no longer a question of if, but when. While gas fees on Ethereum have historically been relatively high, since January they have been dipping. This is down to the NFT market cooling down. Less NFT trading means less demand for the Ethereum network and therefore lower fees. Layer 2 solutions like Optimism also help. Still, despite the recent drop, transaction fees on Ethereum are significantly higher than on competing networks Avalanche, Terra, or Solana, which have all surged in value to land a spot in the top 10 cryptocurrencies by market cap. Other Ethereum scaling solutions, such as Buterin, are also proving popular, but pro traders are not confident about the $2,500 support according to derivatives. Ether investors are having a rough time in 2022, with ETH accumulating 25% losses year to date as of March 17. Still, the cryptocurrency has bounced multiple times near $2,500 over the past couple of months, signaling a solid support level. On March 15, Ethereum developer Tim Biko announced that the Kiln testnet, formerly Ethereum 2.0, successfully passed the Ethereum merge.the process. Involves taking Ethereum's execution layer from the existing proof-of-work layer and merging it with the consensus layer from the beacon chain. The end goal is to turn the blockchain into a proof-of-stake network. The United States Federal Open Market Committee increased interest rates to 0.50% on March 16, the first such move since 2018. The Monetary Authority warned of persisting upward pressure on inflation, precisely the problem that cryptocurrency's digital scarcity aims to solve. Investors fear that further rate hikes by the FOMC could have negative consequences on risk markets. For example, a higher cost of borrowing reduces economic stimulus, creating a hurdle for businesses' expansion and consumer spending. Regardless of its potential, Ether 80% historical volatility shifts most investors' perception to see it as a risky asset that will inevitably succumb to an eventual broader market correction. Ether futures show modest sentiment improvement. To understand how professional traders are positioned, one should look at Ether's futures and options market data. Firstly, the basis indicator measures the difference between longer-term futures contracts and the current spot market levels. The annualized premium of Ether futures should run between 5% and 12% to compensate traders for locking in the money for 2 to 3 months until the contract expires. Levels below 5% are extremely bearish, while numbers above 12% indicate bullishness. The above chart shows that Ether's basis indicator recovered from 2% on March 13 to the current 3.5%. However, such a level falls below the 5% threshold expected on neutral markets, signaling that pro traders are far from comfortable holding ETH futures longs. Thus, one can assess that an eventual break of the $3,200 resistance will catch those investors off guard, creating strong buying activity to cover short positions. Options traders fear ETH could drop lower. Ether's daily closing price has been ranging from $2,500 to $3,000 for the past 27 days, making it difficult to discern a direction in the market. In that sense, the 25% delta skew is extremely useful, as it shows whether arbitrage desks and market makers are overcharging for upside or downside protection. If those traders fear an Ether price crash, the skew indicator will move above 10%. On the other hand, generalized excitement reflects a negative 10% skew. That is precisely why the metric is known as the pro trader's fear and greed metric. Even though there was a modest improvement on Ether's futures premium, the indicator remains on a bearish level. Considering the ETH options market's pricing a higher risk of downside, it is safe to conclude that professional traders are not confident that the current $2,500 support will hold. However, not everything is lost for Ether bulls, as the cheap futures premium offers the opportunity to leverage long at a low cost. As long as the Ethereum network continues to advance on solving its scalability problem, it is still possible that the $3,200 resistance gets revisited, considering the global macroeconomic uncertainty and inflation. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision.